What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for February 7th, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was quite flat. Not really a lot going on. We try to see if essentially the China hot air balloon being shot down would affect the market, and it really has not. But there's two big takeaways from today. First off, the market is holding extremely strong, which leads us to believe that we could potentially continue a rally. But here's something that's quite interesting. Over the past 2 years, since AMC essentially had that big short squeeze that essentially destroyed a lot of institutions 2 years ago. Um, that has been a trend roughly around the same time of year. After our Christmas rally after earnings, we have had meme stocks, essentially start to pump when the market is not moving. Now, right after that happens with this pump, the market normally comes down pretty quick after that. And guess what is happening today? You have a bankrupt company in Bed Bath and Beyond today. Absolute ripper, straight up today. AMC, another absolute ripper today. And GameStop. Jimmy. GameStop, another big rip today. Um, Absolutely just absurd. And this is, like I said, it's gone on over the past 2 years. After the first squeeze that's happened, it started happening again today. And so, is that essentially giving us a warning shot of a potential flip? And with everything that's gone on, now all of a sudden, Goldman Sachs came out and said, we have seen the peak for 2023. Goldman Sachs has also released some stuff over the past month, essentially saying that 2023 is going to be really bad. And then now we've had earnings absolutely just horrible, right? We barely hit expectations. Things just are not great. This is something I've talked about coming into this week, that things aren't great. We've had the earnings. We've got the gist of what's going on. And now we had the Fed, post big earnings. Yes, there's still many continued earnings, but the market has enough data to move from now. That's why they do a lot of big earnings the first 3 weeks. And then after that, the market knows where it needs to go after that point. That's where we're at right now. We've had a 25-point basis move coming in. Today you had Bostic come on and say that a 50-point basis move is not out of the question, and also is questioning the job numbers from last Friday. Those numbers were absurd, right? How can we jump? I think it was like 6 million out of where we were. And like I've stated this morning, if you didn't catch my morning call this morning, I started looking deeper into how essentially the non-farms were essentially generated. And, they'll take hours work, full-time, part-time, and then starting to break that down, right? And thinking, well, people are probably working multiple jobs and working around the clock. So that's probably why you're getting a massive amount of numbers. I don't know how that's projected into non-farm actual numbers, but and how that's actually projected in what's going on, because people are just trying to stay up with inflation. And so they're working around the clock to be able to do that in hopes that they get relief at some point. Problem is you can only do that for so long. Problem is along with a lot of other things that we have, low savings rates, a lot of people have taken out HELOCs, mortgage home loans against their home, and understand that they are just trying to stay afloat. The HELOCs are going to put people underwater. There's a lot of other issues currently right now. Low savings rates. HELOCs have actually bounced up quite a bit. I believe it's actually over 50% now. Homeowners, right? People, and then all the other things I talk about with, Arizona. You're right. They're one of the lead indicators for the housing market. A lot of people are price gouging on homes. I've seen a lot that are posted like over $700,000 have had to take about $100,000 off, and stuff is just sitting on the market for way too long. And obviously, people are price gouging, so that's where a lot of that comes from. But what is happening right now is you're getting the normalization of where housing, used vehicles need to be. We had that normalization in the stock market last year. Now you're seeing that delayed reaction come into the housing market, come into the used car industries. Normalization is typically given true price of what things should be. That's what you're starting to see. We saw it again last year with the stock market. Now we're starting to see it within other markets, right? You have a delayed market in the housing market when it comes to that side, which is actually funny because essentially with the housing and mortgage loans, they get a dramatically impacted first when it comes to rate increases. And so this is why you're seeing this. And then again, you have all this misleading information with articles saying, well, housing and mortgages are still 2% year over year. Yeah, but let's exclude the parts that matter, like the 12% decrease that we've had over the past 6 months, right? And you're seeing that in auto loans as well. And so now auto loans is also dealing with this issue that they are essentially giving out loans to whoever wants a car, right? They're just trying to get them off the lot because they don't have any turnover. And so they're getting stockpiles of cars. But it's not, the funny thing is, it's not cheap cars. Cheap cars, obviously, people are trying to save money. So the cheap cars, essentially, the demand for cheap cars is still there because people need to have some form of transportation. But on the flip side, all your high-end mid-sized vehicles are starting to come down. You're starting to get a surplus of vehicles there. And so once people start getting laid off more, the demand for even the cheap cars are going to come down. And so this is what we're dealing with right now and what we're trying to play through. And so to think that everything's going to be okay, it's not. This feeds into the thesis that I've been talking about for a couple months, right? And again, I like to emphasize that I am a permabull, but this is too obvious and blatant that you can't just pass this up. This needs to break before things get better. Recession needs to happen. You have to understand the cycles of recession are necessary to be able to normalize all things, not just the stock market, but all things. To normalize the markets themselves, the housing market, to normalize the automobile industry, right? All these things, they need to be normalized. And you have to have these cycles of recession to be able to do that. And then today with Bostic, he's not a voting member, but the problem is that he's speaking the truth, right? When is it going to take? First, it's normally Bostic who has these kind of crazy thoughts and ideas, and then you come out with these other people that are actually voting members that say no, maybe a 50-point basis move is still on the table. That's something that Powell likes to keep reiterating is we're not done yet. Now, the thing is we do have Powell tomorrow. He's at a very odd time. I believe it's at like at 12:40 p.m. Eastern Standard Time in the middle of the day. He'll be coming on. Question is, will he be fielding questions? If he's fielding questions and not reading a statement, then it could get pretty nasty. And if by chance he mentions there's a possibility of a 50-point basis move, the market come crashing down. Again, we've seen Powell state something, the market comes flying down, and the next day it pops back up. Problem is if we jump back, if we take any steps back, it's going to scare the market. The market feels like everything's turning, but this is what I'm talking about. We're going to have to take a step back, and that's what the market doesn't realize. And again, you have to realize algorithms are going off of headline news. So this is why the market moves the way it is because it's going off of headline news. So with all that being said, we are in a very interesting predicament right here. So we still have this huge gap down to the 40.32. Let me take off the studies so you can see this stuff better. The market was so flat, and you don't really have to change any of the lines. And one thing you need to keep in mind is the dollar has been rocketing back up. And something I said, you need to be very careful when that happens. And it's doing that, but the market isn't moving with the dollar. So is it either the dollar that's going to correct, or is the going to be the market that is going to correct? So you have to be very mindful of that. This thing really starts selling off again. It needs to break a lot of support. But again, started off the year halfway through. We'll see what happens here. I don't like the way things are. Things look very, very interesting, like we're setting up for a huge flush. You had Michael Burry come out last week and say, sell. You had a lot of other people, the banks have been kind of advertising things are going to get worse. And then today with you've seen the peak of the market of 2023. If that's the case, we could see, right? There's a lot of really bad things. I am pretty much all cash, right? It's not saying I haven't played to the upside. I have played to the upside, but I'm at cash waiting for that bigger move because I am still waiting for that bigger catalyst. Again, this is not financial advice, but there's just way too many bad things that it needs to break. We need a recession for things to normalize. Housing is still out of control. Automobiles still out of control. Food is out of control. We need to normalize things, and to be able to do that, you have to go through this nasty process. And there's nothing nice about what we're going through, and it's going to get worse because right now the Fed feel, okay, well, since employment is so good, well, we can keep raising rates at 50-point basis moves and get down to 2% a lot sooner than we thought. That is the idea we want to stay away from because that's going to crush the market. And that's what it's going to take. How many times are we going to go through these soul-crushing experiences to realize that it's not going to pivot yet? Now, we need to see pain. We have not seen pain. And that's what's concerning is things are extremely high. And energy is extremely high and getting ridiculous how expensive energy is getting. So SPX, we wait and see tomorrow, see what if Powell can move the market tomorrow. Otherwise, we're going to have more Fed members coming on during this week. And again, their opinions will move the market a little bit. But if Powell, again, takes any questions and deters from what he said last week, if he starts coming in hawkish again, that could be a cause of concern. And that could potentially cause us to start selling off again. Again, how far? We don't know, but we'll see. So again, bulls, to be honest, bulls, you want this back down here as well. You want this to at least retest. We could potentially start running up. You don't want parabolic moves. You want a healthy pullback, then start pushing again. Again, needs to hold 4,100, needs to push through 4,200 for the bulls to continue. Otherwise, bears, you need the break of the 4,100, and you need a hard break on the 4K mark. Again, the 4K mark is going to be extremely hard to break. You're going to need some real gas to be able to break that. So there's plenty enough catalysts for that to happen. They just need to play out. The dollar, again, huge rip. Again, bears, you want this to break back over 105 for this thing to start potentially selling. Bulls, this is not what you want to see. You want this thing to still keep selling off and break 100. But we're going to have to see how that does play out there. Bitcoin, again, hard rejection. This thing needs to break above, again, the 24K mark. Otherwise, it needs to not break down below the 22K mark. See new lows if that potentially happens, or maybe just revisit the 4K, the 15K mark. But we really have to see. We need a catalyst to kind of guide us which way we're going to go here. Tesla, again, absolutely parabolic move. There's been a lot of upgrades. Like, people are trying to continue to push tech because, like I stated before, tech is going to be where if you want this thing to keep pushing, you need tech to keep rolling. Problem is they are very overextended already. This thing isn't going to keep pushing up. You need a bigger catalyst for this thing to push up. Right now, there's no positive catalyst for tech to keep going. So potential rollover, you just have to watch out for that. Apple, same thing, parabolic move. You want this thing to keep going. You need to have healthy pullbacks and hold support, not just complete parabolic move and just continue up. That's not healthy for a complete pivot in the market. You want this thing to be pulling back and holding ground, and it's not doing that. So again, I think we're very close to a potential pullback. We are into that normal pullback cycle in February and March. The problem is it going to be a bigger catalyst that's going to do that? So we're really kind of watching to see what happens there. BA is breaking, needs to hold the 204. If this breaks down, could start seeing some heavy selling. Again, it's been parabolic for a whole quarter and some change. So this thing needs to pull back nonetheless. I don't want to keep saying let it keep going up, because you're asking for trouble if this thing just continues to push up. Again, there's no true catalyst for the market to be going north. Things aren't better. Things are a lot worse. But again, data is stating otherwise with the amount of numbers or however that non-farms were generated. If it's a massive amount of numbers, if a lot of people are working 80 hours a week, that could be bumping that number up just so that people can make ends meet. At what point and at what cost do things fold? And I think we're getting very close to having that answer, to be honest. JPM, again, kind of just really floating. You really want this thing to break the 145 mark. Otherwise, you don't want this to break the 130 mark. Again, if banks start selling, it's going to be a catalyst for the rest of the market to start going. Again, all consolidating, banks all consolidating, waiting for that next move. Yes, it's a big range, but it's still consolidating. It's still floating around a range. That's what I'm mostly talking about. Now, AI has been big in the headline news as well. You got BBAI, a massive ripper. Anything that says AI, massive ripper. Google, Microsoft have been talking just because of the massive popularity around ChatGPT. So anytime AI is mentioned, I think a lot of things are starting to just rip parabolic. So Google put out another article today to try to pump their stock up because it's a key word right now. Where is Google? Google tried to pump today, but it's doing poorly as well, right? Google needs to hold 101. If not, it's breaking back down, and then we'll see where this lands as well. But not good. I mean, you want a strong bull case. Why would the market continue to run when things are bad? I think the market's starting to realize that there's a lot of fear. Now you're starting to get more articles out, right? When institutions are trying to drive agenda, they need it to adjust, right? Maybe institutions all sold, and then now the market is still pushing. So now the market wants to correct it. So let's put out some articles to potentially drop it. We'll have Bostic come on with a 50-point basis move, threaten a 50-point basis move. He's a non-voting member. Let's see what kind of impact he has. It hasn't moved the market. Okay, Powell, we're going to need you to mention that 50-point basis move is still on the board tomorrow, and then drop this thing to where we can get in, enough to where we can get in. Potentially conspiracy theory, potentially, but this is what happens in the market. And you read charts, you look at charts as opposed to not looking at headline news. This is the things that you see. These are what happens, and then these news events occur to try to drop the market. This is the way the market works. So you stay in the market long enough, you watch charts, you watch price action, you watch the news events. Events are very, they drive everything. Sometimes they land within zones, sometimes they don't. Patterns do not work. Right? There's a very slim chance patterns work. But nonetheless, it's all event driven. So if you know what events are coming up or pay attention to what's going on throughout the day, then this is why you have to play intraday if you're going to be a trader, right? An investor is completely different. Investor is buy and hold, and that's your plan. Day trader, I'm not so much a day. I swing a lot, majority of the time. I do take some intraday day trades. Now, when the setup is there, right? I look for gaps. If we gap up, you can play up. If we gap down, you can play down. Really depends on what event is driving it to gap up or down, right? That's demand. And so if you can follow the volume, that's a good way of doing it. There's other ways you can find about doing it as well, but you just have to find a pattern that works. And not so much a pattern, but a process in a pattern. and events that drive it, right? So you have to have some sort of process, and as long as that process is, you remain consistent with that process, you will find consistency, and you will find many things. But it's just having a solid process and not diverting from that process is what you'll find works best. And again, you have to find what works for you. I've always found that you stick with the same things, you trade the same things. It should be boring, not exciting. Yes, you can play the exciting ones every now and again, but with risk management, right? Like you go into position with only so much, and realizing what time frame you are entering that position and when you plan on getting out. Everything else is just gambling. You don't want to be gambling when you're in the market. Yes, it can be gambling to an extent if you're just throwing money and hoping. But if you're paying attention to all these other different things, they help, right? They reduce risk. And that's what you're trying to do, is reduce risk. Unless it's your prime setup, all ducks line up, then you put on more risk. Right now is just really not a time to put on a ton of risk, because there's still so much uncertainty, right? You're assuming we're going to keep going up. We're assuming you can go down. You have to be adjustable. A news article can drop tonight and things be completely different and change the dynamic. And then the market, China attacks, and then the stock market can be down 500 points. The war in Ukraine ends tomorrow. Inflation, or Powell wakes up tomorrow and says, you know what, we're going to start decreasing rates. The market could rip off that, but then turn around the next day and say, oh, well, that's not really good because inflation's starting to run back up. So the market drops 500 points, right? These are things that are possible. These are options. You have to understand that's the way the market works. The market is based off of emotion, right? And emotion is unpredictable. Panic is unpredictable. This is why the administration, this is why the media and everything paint a picture that everything is okay, because when you start, when people start feeling that there's a sense of panic in the air, they panic, and then they're uncontrollable, because emotions make a person uncontrollable. And so nonetheless, not going to continue to rant. We will see where we open. It was a very flat day, but some very interesting data that came out today that needed to be discussed and kind of thought through thoroughly and talked through, as it not only helps, hopefully helps you, but it helps myself get these thoughts and ideas out, and then kind of, again, re-emphasize or build a bigger case to the theory that I have on what's currently going on and what could potentially play out. Again, you have to have different options. Right now, again, it's I don't want to be a bear, but there's no other thing justifying for us to go up. I know there's a lot of talk about, well, tech has been completely oversold, so it's justification to go up. That's not justification, in my opinion. That's not enough. The only meat you have left is, well, it wasn't tech, and tech has already been parabolic, right? Like everything is sitting exactly the same. When all industries across the board start looking exactly the same, you're setting up for a really bad move, and that is my concern. So with that being said, go ahead and drop a thumbs up, comment, like, retweet, whatever you want to do. Let me know what your thoughts are on this and everything. I want some more feedback on this stuff. I like hearing from you guys, so go ahead and do that as well. Drop a comment, and then I will see you guys on the next one.